your retirement is just a few years away, it may be time to adjust your investing strategy.
The shocking statistic is that by the time somebody reaches 65, 95% they're dead broke, they're dependent on family, or they're dependent on government.
It's important that people deal with someone to make sure to prove and provide that guaranteed lifetime income.
Welcome to the Retirement Architect, David Reyes. Our program is designed to not only provide insight, but to educate and to give you the tools you need to help you design and build a rock-solid retirement.
Good morning, San Diego. This is David Reyes, your retirement architect. And I have to disclose something today. I'm a little injured today. I've been fighting this terrible summer cold that hopefully none of you out there have. I know some of my clients and my friends and family have had some of this, so hope you've avoided it because it's not pleasant. So I'm going to do my best here to hopefully educate you, make you smarter and safer and more secure in your retirement and your retirement planning. So let's jump right into it. Let's talk about what's happening on more of a macro level, a big picture level, if you would, with the markets. The biggest storyline right now is interest rates, and there's no doubt about it. Our wonderful Fed chairman, Mrs. Janet Yellen, the first female Fed chairman in the history of the United States, has a tough job. And right now, they have decided to end quantitative easing, end tapering as of October of this year. There will be no more asset repurchases, which in English means that they will not be buying bonds, buying securities, buying mortgage-backed securities. And all what that does is really has created a low interest rate environment that has helped to really increase asset prices, or code word for the stock market and real estate market. So we've been kind of on a sugar high for about 5 years, going on 6, and that's basically going to end for sure. It has not done much to stimulate the economy. So you've really had kind of a muddle through economy for the last 6 years. And really what all you've had, which is great, is you've had a great stock market and great real estate market. So a lot of you out there listening have made a lot of money with this. Some of you have sat on the sidelines because I see you and you've been a little timid, but a lot of people have made money as well. So, there's lots of things that the market is ignoring right now. And with the end of quantitative easing and tapering, the next question is, when is the Federal Reserve going to raise interest rates? And so, one of the concerning things that I have, that I see in trying to protect you, so you're aware of this, is that, the market seems to be shrugging off a lot of, let's call them, I don't know, maybe little blows or little, let's say, I guess for a lack of a better term, let's just say there's warning signs everywhere. And one of them is been, we have a lot of issues that are kind of external to us. We still have Iraq and the Ukraine, and now we have the things going on in the Gaza Strip. And, those are issues that can derail this stock market run. And really, the market has just blown off all of this stuff. It's kind of just shaking it off and moved right along, and we're at all-time highs in the market still. And, that concerns me. And it's kind of like the casino, a new casino opens, and this is really a fact. And what happens when a casino opens, a brand new one, you will have loose slot machines. They want to have people make money. They want the bells to go off and the sound of the coins dropping and all of those great sounds that if you're a person who has an occasional gamble or two, knows what I'm talking about. And so these new casinos will do that. And what happens over time is that as they allow for these loose slot machines, people get more confident. Right? They get more confident in their abilities. They think that, wow, shoot, I'm the luckiest player around, or I'm the most skillful slot player around. I don't know if that's possible. But, and then what happens is over time, they become overconfident. And, they don't realize that really about a 1 in 264,000 chance of, or higher, of winning actually a jackpot in the slot machines. So basically, eventually you have enough fish in the barrel, so to speak, the casino begins to tighten up the slot machines. And they want to put the odds in the favor of the house. So as the players begin to lose more often, than you win, you keep playing under the assumption that, your cold streak is about to end. Moreover, just as soon as you get back to even, you'll quit playing, but eventually you'll run out of money and you'll leave the machine. And there's some truth behind this saying the house always wins. This analogy is what we see in the stock market today, in my opinion. The action of the Federal Reserve to suppress interest rates and inject liquidity in the system has most definitely tilted the current odds of winning in the player's favor, which we've seen for the last 6 years. With asset price at really lofty levels, it's one of those times where, it's kind of, ladies and gentlemen, step right up and test your luck. Stocks are the only game in town. And you kind of heard that because bond, interest rates are so low. I think bonds are probably the most riskiest asset class out there. And we're going to talk really in depth today about bonds and about really what you know about traditional asset allocation. To me, in retirement is completely wrong, that passive portfolios in retirement can be completely destructive and cause you to run out of money in retirement. And we're going to talk about, some ways to avoid that and why I believe that. Of course, as the markets rise in the face of some of these adversities I've talked about, and there's many, many more I could go on about that I'm not going to today for the sake of time to get to more meat for you. But, we've had really this mud-along economy that we've seen. And unfortunately, you get this, can't lose mentality. It's been fostered by excess, confidence in people's ability to make money in the stock market. Of course, there's always been the psychology, cycle of investors over time. And the reason why individual investors wind up buying high and selling low, as the market continues to rise, you will see more and more people participate. So right now we have the highest participation level in the market in the last 7 years. So, it's that greater fool theory, and you don't want to be the greater fool, so to speak, the last one standing. So there is somebody that always buys at the very top. And so my job is to protect you, and we don't want to focus on how do we squeeze every penny out of the stock market. There's a statistic that I use all the time, and it's that we only need 30% of the upside of the S&P 500. If you only captured 30% and you never had a loss, which, believe it or not, is possible. We're going to talk about that today. But let's just assume and suspend animation here for a second in your mind and pretend that that is possible. If you only had 30% of the upside, so the market's up 10, you're up 3. Market's up 20, you're up 6. But the market goes down 40 and you get 0, you actually beat the market. So there's a couple of ways to attempt that. And there's some ways that strategies are built that way. And so we really focus as investors on the wrong thing. We focus on how to, make the most amount of money. And in retirement, it's a different story. And that story comes from an accumulation cycle into the second phase, really, which I call it, which is the distribution cycle of your life, which is usually 25 to 30 years plus. And that's a totally different animal. And so how we got to where we are is not going to be how we're going to get to where we want to be. So I'm in the middle of finishing a book with Mr. Steve Forbes called Successonomics. And I'm offering to the first 5 callers a free copy of a chapter of the book. It will be published, so this is kind of a preview chapter, so you're very fortunate to get this on Successonomics. And for the first 5 callers, I will send you a copy of a chapter of the Successonomics books written with Steve Forbes and myself and some other advisors and other really, really more brighter people than me. So I was just fortunate to be a part of it. But if you want a copy of that, you want a copy of a chapter from the book with Stephen Forbes called Successonomics, written with myself and some other advisors and other brain trusts around the country, please call 877-406-2255. That's 877-406-2255. And we'll return here after the break. This is KFMB. This is David Reyes, your retirement architect.
With baby boomers retiring at a rapid rate now, what we're trying to do for them is get them some income.
The obvious choice for the job is a loyal, hard-working employee, a name you all know.
The retirement architect, David Reyes, will continue next.
Do you think the market is going up or down?
Let me ask you, is that the right question to ask? Here's a better question. When the market goes up, do you get to lock in your gains? What if you had a plan in place and didn't have to stress about the market going up or down? Here's another question. Do you have a plan to never outlive your retirement money? What if the market crashes at the same time you need to start using your money for retirement? Taking withdrawals from your retirement account can have devastating consequences. Our 7 Secrets to a Stress-Free Retirement Kit can show you how to avoid market risk and how to create a predictable income stream that can rise with inflation. Pick up the phone and call Reyes Financial Architecture now at 877-406-CALL. That's 877-406-2255.
Did you know there are 567 ways to claim your Social Security? Mistakes could cost you up to $250,000 in lifetime benefits. Take charge now. Get yourself educated. Reyes Financial Architecture is your San Diego expert in maximizing Social Security and retirement income. Sign up now for our next workshop, Smarter Social Security and Income Planning. Call now, 1-877-406-2255.
How would you like to pay 0 taxes on your retirement income? You heard it right, 0 taxes. Most Americans are sitting on a time bomb and won't even realize it until it's too late. Up to 85% is taxable due to poor IRA distribution planning. Would you like to know how to reduce or eliminate those taxes? Our advanced planning can show you how to turn your retirement account and your Social Security money into a lifetime of tax-free income. Call Reyes Financial Architecture now at 877-406-CALL. That's 877-406-2255. Our 7 Secrets to a Stress-Free Retirement Kit might be your first step to a tax-free future. Just imagine that. No taxes on your retirement income and no required minimum distribution. It's time to take control of your retirement by removing the shackles of government that tell you how much to withdraw and how much you can keep of your hard-earned money. This service is absolutely free. Call Reyes Financial Architecture now at 877-406-CALL. That's 877-406-2255.